Welcome to Project Generational Wealth. Today we're going to discuss risk management. Now, before I get started, I am not going to enter any trades today. This is strictly to discuss risk management or my suggestion for risk management. I am not a financial advisor and this is not financial advice. However, I am just going to share with you my particular strategy when executing or looking to execute trades that are available in the Shift app or the Titan app or some of the other applications that I use. Now, Shift app notifications do not come out every single day. Every trader trades differently. And every trader has a set monthly goal. And once that goal is achieved, they don't trade anymore. So because Shift app trades do not come out every single day, I am going to use some of the recent trades in this particular example. So with the volatility in the market right now due to the Russian Ukraine war, along with the inflation that is being faced in the United States, the markets are not following its normal pattern or the pattern that most traders are usually see when the economy is functioning normally or when there's no war, no active war. So in this particular example, I'm just going to use the Euro Canadian dollar as my first example, and then I will go over another example as we discuss risk management. The thing to remember about risk management is your stop loss. So it also includes your investment, but that it's not solely how much you invest in the market. It's more so of your stop loss times your investment. So for example, if in this particular example, the Euro Canadian dollar, in this example, the stop loss is negative 40 pips. So if I invested $1, we're just going to keep math simple with no leverage. If I'm investing $1, then I'm risking $40 in this trade. Why am I risking $40? Because if I invest $1 per pip and I am willing to go negative 40 if my trade goes south, $1 times 40 is $40. So, but what is my reward? If I am going for take profit 1, I have a 20-40 risk reward, right? I'm risking $40 to gain $20 in this specific example. Okay. So I am personally not a risk taker in generally speaking. So I'm more conservative because of the volatility in the market. As a result, when I enter a trade in today's market, I do the exact same thing that you've seen in my previous videos. I will copy and I will paste my take profit, just like I've discussed in the videos. But I also reevaluate my risk tolerance. So because I have a more conservative approach right now due to volatility, I personally am not willing to risk 40 pips, for example. And this is just an example. So if I were to receive this trade alert right now and I looked at the negative 40 pips, I have some trading experience, so I know how to look at charts, etc. But let's say I didn't have any trading experience and I did not know whether to judge whether this was a good trade or a bad trade, but I know that my risk tolerance is low. So let's say I'm comfortable with a 20 pip loss. So here I would go in and I would change my loss or my stop loss by 20 points. Now, how do I do that? Okay, so let me just break this down a little bit. So when you are trading most currency pairs, with the exception of the JPY, anything ending in JPY or involves JPY, which is the Japanese yen, that has 3 digits, but everything else has 4 digits. When you're trading a Forex pair, you're looking at the last 4 digits after the decimal. So when you are taking a trade, each pip is the movement of this number right here. So if you're going up 1 pip, you would go from 1.3625. Because this is a sale, you would go to 1.3624. But we're going 20 pips, right? So that would be less 20, because when you have a sale, you're thinking the price will go down. So in order for me to change my stop loss, I'm saying, okay, if I expect the price to go down, I don't want it to go up. So if I'm being conservative, I want my stop loss only to be 20 pips above the entry level versus 40 pips. So I would take 1.3625 and add 20 to this number. And that would give me my stop loss, my new stop loss. So if I add 20 to 25, I would get 1.3645. And so I would go here and change the 6 to a 4. Now I could do it in the reverse. I can say if the stop loss is 1.3665, I can subtract 20 from 65, which would give me 45, which is the same exact thing. Also, let's say that because of the volatility in the market, I'm not quite certain that the pair will go up 20 pips before reversing and going in the opposite direction. So if I am being less risky and I want to try to maximize my win-loss ratio, then I would change my target to 20. From 20 to 10. And how do I do that? Extremely easy. So this is 1.3605. So if you subtract 20 from 3625, you get 3605. Well, instead of subtracting 20, I would just subtract 10, right? Because I only want to go 10 pips. Or I would add 10 here because this is 20. I only want to go 10. So I would add 10 to the price, because when you're selling, you put your stop loss, of course, above the entry price. But if you're adjusting your take profit, you're going to go up. You want to go to a higher level or a higher number to get out of your trade. So you would just add 10 to the take profit. So I would just go here and change my take profit to 15. So whatever's easier for you to remember. If you're going down and you want to subtract 10 to give you 15 to get your answer, or if you want to add 15 to your take profit, however, whatever's easier for you to remember, that's what I would personally do to kind of manage my particular risk if I'm feeling less risky. And so I'm just going to go over another example for a buy. In the second example, you will see the GBP JPY pair. And as we discussed earlier, the particular pair has 3 digits after the decimal point instead of 4 digits. So here we discussed a pair that had 4 digits, right? Because it did not have JPY in the pair. In the next example, we do have JPY in the pair, and it's only 3 digits. So in this particular case, since we are buying, this green here represents buy. Since we are buying, then we expect the price to go up. However, if you want to be more conservative with your take profit and you only want to go up 10 pips, you would take the entry price and you would add 10 to the entry price. Now, because this is a JPY, you would add 10 to the first number after the decimal. Again, since this is a JPY pair, you would add 10 to the first number after the decimal if your take profit goal was 10. Now, of course, you would make this adjustment if you wanted to do other take profits that's not already outlined below, because all of the take profits are usually even number take profits. So if you want to go to 10, 30, 50, 70, 110, etc., then you would have to make those manual adjustments. And to help you understand what number to change when you're recalculating your take profit, you can just look at take profit 1, right? And you can see what digit went up 20 points so that you can calculate it correctly, or so you can change the correct digit when recalculating your take profit. And the same thing with your your stop loss. So you would do the exact same thing with your stop loss. So because this is a buy order and you expect the price to increase, you would set your stop loss below your entry price. Because if you expect it to go up and something occurs or some news comes out and it takes a left turn and it starts to sell, then you want to set your stop loss below your entry price so that when it hits your stop loss, it'll automatically close your trade. So in this particular example, I personally would have left negative 20 pips as my stop loss. But if you want to be even more conservative than negative 20 pips, then you can change it to negative 10 or negative 5 or whatever the situation is. But just be mindful that when you're changing your stop loss, you want to give the trade or the strategy time to fluctuate. So what do I mean by that? So there are something called support and resistance for those that are not familiar with trading or charts. And I can give you an example of a chart. So let's pull up a chart. So when you go to place a trade, you can, instead of placing a new order, you can open a chart. When the master trader puts out a strategy, they also indicate the chart time frame that they were looking at when they put out the alert. So you can then identify the time frame that the master trader was looking at, and you can go to your chart and whatever program you use and look at the same chart to understand what they're looking at. Of course, if you're not familiar with reading charts, then it's not going to help you. But if you are familiar with reading charts, then this would help. The master trader got in the trade around here, and you can see that the lowest point of the trade was down here. And this is on the day. Now we can change the different intervals to get a closer look. So we can go to the hour interval and you can get a closer look and you can see more of the price action in more detail. So you see that here, around here, and then the trade went from here, as you can see, all the way down here to this point right here. And then it, what we call consolidated before going back up, right? And that's the reason why you see a negative 10 here, even though this trade is closed. It's still tracking the current price, but it has gone back up. And so now it's trading up here. So I hope that information was helpful. One thing that some people do, because they are not going for the full goal, is that they will double or increase their investment amount. So for example, if you normally invest 0.01 or 0.05 or 0.25, because you're not going to the normal plus 20 pips take profit, some people would double it to 0.10 or 0.20, etc., so that it's the same reward as far as monetary, but it's not the same risk. But on the flip side of that, keep in mind that your risk is equivalent to your stop loss. So if you double your entry price, then your investment amount, then you will lose twice as much if the trade goes south. Just keep in mind. So you have to understand what risk is. Don't take trades personal. You have to kind of take the emotions out of trading. The market does not do anything to individuals. It is just us trying to play the game. So I hope that this information was particularly helpful, and I hope to see everybody in the money.